The Foschini Group was founded by George Rosenthal in 1924 and incorporates 14 trading brands ranging from fashion, sportswear, jewellery, cosmetics, cell phones and homeware. Sports Scene was launched in 1996 and Total Sports was acquired in 2000. The group has a market cap of 31 billion rand, a price to earnings ratio of 16.7 and a dividend yield of 3.5%. This falls into your luxury goods environment.
Yes, and the reason it is because it owns American Swiss, which was purchased by Foschini in about 1969, and then also Stearns, which was purchased in about 1993. Then they've got another thing called Matrix, which is sort of lower end jewellery. So it's about 20% of Foschini's sales, and they're the market leader in terms of the volumes, in terms of engagement rings and all of that kind of stuff in mostly shopping mall situations. So a nice division of
And it's a well-known
Foschini's
brand. We've all grown up with American Swiss being the default jeweler before you hit Cartier.
Oh, that's for sure. I mean, you know, a lot of brands in Foschini and certainly a very big retail footprint. And I mean, if we look at Foschini, it's kind of been caught up with all the other retailers being re-rated to much higher multiples than they've historically traded at.
And then, of course, the argument exists as to, here's the sector rotation that we've seen of late, out of industrials into potentially resources. Do you venture into a stock like Foschini, given the industrial surge, the industrials holding up, defying normal valuations? Where are we going with this argument?
Yeah, I must say I quite like it. Look, it's a 30 billion rand company. Doug Murray, the CEO, has been on the job for about 4 or 5 years. Before that, he was a regional director or one of the divisional directors. So they've got a good management practice. The Lewis family took control of this entity in the 50s, but have since exited. So now largely institutionally held. It goes through phases. Obviously, in retail, sometimes you get the mix a little bit wrong. But they've got a lot of brands. I like the sports thing, as you know, because that's got an aspirational consumer sort of thing as well. Because if you look at those sports stores, they're not really selling sports equipment. They're selling, you know, branded sports shirts.
It's what we will catch you in on the weekends. We've often discussed this.
Yeah,
that's
and
what
you know, people want
hang
to
about
wear
the house in.
their Barcelona shirt or whatever. So that's great. And I mean, I think they'll continue to do well. They haven't done a lot yet in Africa, outside of South Africa, that is. So they've got that still to kind of get right. And I think the model of being led into malls with these shiny stores, the youthful Exact brand, all these things, I think I like it. It's a good one.
Jonathan, do you own it? Before we go any further.
We don't own it. We used to own quite a lot. Unfortunately, we exited too early, should we say. I think that's...
I hope you're not holding on to Anglo-American too long, exiting the industrials too early.
Yeah. Well, I mean, no, certainly recently it hasn't been the right call to make. From Foschini, I mean, we've had a recent update from the CEO. I mean, like-for-like sales are up 7%. I think total sales are up around 12-13%. So it's continuing with its growth. You probably will see earnings up 20% this year. It's just a question of multiple. And I mean, Foschini, compared to all the other retailers, this is definitely the cheapest of the group in my mind.
Yeah, because it's on a PE of around 16 or 17 or something historic, where some of its peers, competitors like Mr. Price are on PEs of 25, 30, all that kind of thing.
Up to 30.
And I think it was because historically they didn't have as smooth a path. Somewhere around 2010 they had a bit of a blups with their, you know, profits were down and they argued that they got the wrong mix.
So we could make the argument then, if we perceive industrials are going to go higher, this could be a good entry point because it may re-rate along with the rest of the sector but get an additional kicker.
Look, I think if you're making long-term decisions about how you want to be exposed to the African consumer, then you've got lots of choices, you know, all the way from the grocers to the Walmarts of the world and the Foschinis, and I think this one is one to have a look at, so I'm happy to give it a
Hot or not on Foschini?
The whole sector, I think, is expensive. This is the cheapest of the sector, but not hot for me.
Paul, hot or not?
I'm happy to go hot because of the sports division.